So what's good, guys? Welcome back to my channel, and in today's video I want to give you a quick rundown on the pound longs I have taken this week. As you can see, I had one short-term trade here, and then also today I had one day trade in the same direction of the short-term trade, and I want to give you a quick trade breakdown and give you my thought process behind taking that trade. So if we go back to this week's market open on Sunday, so let's take a look at the daily chart. What can we see? Overall, we have a bullish daily order flow, right? So higher time frame order flow is bullish, meaning we want to prefer longs over sells, as we always want to be aligned with the higher time frame order flow. Last week, as you can see, we also have taken out the buy side resting above those highs. And as you can see, once we initially took out that high, we failed to close above, right? So we had an SFP, a swing failure pattern above that high. And then on the following up day, so first day last week, and then Friday as well, you could see we were able to close above that swing high. So instead of having an SFP, the candle bodies closed above, which for me was an indication that price is willing to trade higher next week instead of reversing after taking out the buy side. So now that we have determined the bias, we have a bullish bias, we want to go to the lower time frames, or the mid time frames, which are for me the hourly and the H4, to determine the potential key levels, which we then can use to frame our narrative, right? So if we check the H4 on Friday, where we closed the last week, you can see price pretty much, we have been a consolidation here, and then we started now to expand higher, right? And if we leave consolidation in a bullish order flow, you don't want to see price to retrace all the way back into the consolidation. So if this here's our consolidation, right, where we have been consolidating after taking out the buy side above those highs, and then you can see we started to expand higher, right? And now, if we're truly bullish, we don't want to see price to retrace all the way back into that origin of the expansion, being that consolidation here. On the H4, as you can see, there was not much to identify besides the consolidation. So what I usually do is, if I don't see anything clear, no clean PD arrays that are identifiable on the H4, I drop down to the hourly, which gives me a more detailed view on the charts. And as you can see here now, what we can see here, we have price on Friday taking out that sell side resting below that weak low here on the hourly, and you can also see we have a key level right below. We have this fair value gap, so we have a key level, and the price has been trading into that key level to take out the liquidity, right? And then we traded higher, and as you can see here now, what happened again, we engineered liquidity in form of this weak low on the hourly. And we also create a new PD array, right? This H1 fair value gap. So what I was looking for, I had two main ideas going into the next week. The first one was a continuation from here, right? Run of stops into the key level. Or if we don't get any reaction from here, then I want to see price to take out this low here one more time into the fair value gap, and then I want to see price to run higher from this low here. One of those two lows have been my POI. So what happened on Monday, we opened up the week, and initially we swept that low, and I took a lower risk buy here below that low, and I had my stops right below that fair value gap. Because if we're bullish, price should not trade much lower than the fair value gap. If we close below, I want to wait for price to sweep the lower low here into the second key level, and then I want to see expansion from here. But price should not, as mentioned, go back to that range here, as that's the consolidation where we have left into the expansion. And now we want to see price to expand higher without going back to the origin. So I took an initial long here, right? The setup looked something like that. I had my entry here, around that, below that low, right here, and stops have been around here, like a 15 pip stop, right? And then as you can see, I got stopped out on the initial trade, and then I have been waiting for price to trade into the second key level. Also, if you check the session profiles, you can see now here we took out the previous day's low, which is that low that I've been talking about, into the second key level, being that fair value gap. Also, what else do we have? We have the double sweep. Double sweep is always a second sweep of the initial sweep of an old low or high. So in this case, we had the first sweep here of that Asia low, and now we see a second sweep of this low here, right? So we have a double sweep, and it's one of my favorite reversal patterns. If we get a double sweep into key level, aligned with the overall higher time frame bias, it's usually a really good sign for a reversal. So what I did here, I entered the trade here again with more risk because I was quite confident in my bias, and my stops have been right around here, below that fair value gap as well, as price should not retrace or trade much below that fair value gap. It can wick below a bit, but it should definitely not close below if we are bullish after sweeping the liquidity resting below that low here, right? Also, I liked this manipulation more than this one. Why? Because we had a new week opening up here, right? This is Friday, then Monday. So a new week opening up, and if you think about the weekly open, low, high, close, then you want to see price to open up the week, open, create the low by trading into a key level, and then start to expand higher, right? And as this would have been only a small manipulation, I was actually more happy with seeing price manipulating a bit deeper into the previous day's low to then start to expand higher from here, creating the weekly expansion. So I entered my second long here, as mentioned, and then I had partials along the way. So I had partials around the London highs, previous day's high, and then partials along the entire way up. So that was the short-term trade entry, and you can see we wicked a bit below that hourly fair value gap, but overall you can see we are respecting that level, and we start to expand higher, right? And now pretty much what I want to see now is price to disrespect the bearish PT arrays that formed on the way down. In this case, this hourly fair value gap, right? So I want to see price to close above and turn this bearish fair value gap here into an inversion fair value gap, and see then price expanding higher from here. And it's strong liquidity, obviously the previous day's high and all those intraday session highs. Once you close above this fair value gap, right, we have that candle here, we turn the bearish fair value gap into a bullish inversion fair value gap, and we want to use this level as an inversion level for higher prices. And you can see here, New York session, open, low, high, close, right? We open up, trade into that inverse fair value gap, and then we expand higher from the inverse fair value gap. And then heading to the daily close of Monday, I took off half of my longs around the previous day's high, and I left the run for higher, as there's still, if we're bullish, no reason now for price to go back lower, right? Price manipulated the lows into key level, saw expansion now, and now price should keep going higher, right? There's no reason for price, if you're bullish on the higher time frames, to now go back to my entry, right? That's why I also took only relatively small partials only along the way. So instead of thinking where can I exit my longs, I try to look for ways where I can add to my longs while keeping my risk at a minimum. The concept behind that is to basically monetize being right as much as possible. And what I want to see is now price to offer me a new setup on the lower time frames to add to my initial longs from the previous day, right? So again, what do? We wait for the London kill zone to start of Tuesday, right? So we have Asia session here, and you see we have a clear consolidation, right? And what do you want to see? If you have a consolidation, we want to see a manipulation, and then we want to see price to start the expansion or the distribution of the AMD. So in this case, we have the range, and we have the range low, being that H1 swing low here, and also the Asia lows, the time-based low. And all I do now is I wait for the London session to open, and I want to see manipulation below that key level, and then I want to see a lower time frame change in order flow to allow me to frame a lower time frame validation level. Because in this case now, I have no clear PD array which would support me as an invalidation level, right? If I buy blindly below that low, right? I don't know, should I put my stop here or here? And this would be 80 pip stop, which is too big. So what I do, I wait for price to trade below the low, and then I want to see a lower time frame change in order flow. So we go to the M15 again, and let's see what London session open is doing. So price now took out the low, right? And now I want to see price to give us a bullish change in order flow. Again, a bullish change in order flow is always determined by how price is respecting or disrespecting certain PD arrays. If you don't know how to determine a change in order flow, then watch my video on determining order flow. In this case, the change in order flow levels would be this share value gap, and the lower one obviously as well. So those two bearish value gaps, I want to see price to close above both. Why do I want to see price to close above both? First of all, price could close above this one, right, the lower one, to trade into this value gap and then go lower. However, if I see price closing above both, then it shows me that price is most likely not going to reverse anymore. Why? Because we have an AMD here, we have a range, right? Price trades to the range low, and if price is truly bearish, we don't want to see price to retrace all the way back into the range where we started the expansion from the consolidation, right? Price should give only a small retracement and then sell off lower, right? So if I use that logic and I see price retracing back into that range, closing above both bearish value gaps, then I'm pretty sure the price will follow the bullish AMD and start the expansion after taking out the lows here. So what do we see here? We close above the first value gap, and we also almost close above the second one. So now I want to wait for the next M15 candle and see if we can create a new bullish value gap here, which then will create a balanced price range, right? A balanced price range is always two opposing value gaps overlapping each other. So in this case, we have a bearish value gap, and if we create now a bullish value gap on the next M15 candle, then this will be a balanced price range. And there we go. You can see here, we now create another fair value gap here, right? This one, a bullish value gap. And also we close above the upper fair value gap now entirely, right? So now what do we have? We have a change in order flow, and we have new M15 key levels where we can look to enter a trade based off, right? So we can now mark out the balanced price range, right? The balanced price range is the area of the overlapping area of the bearish value gap and the bullish one, right? So in this case, this entire purple box is the M15 balanced price range, right? Now we can also drop down to the lower time frames, or one time frame lower, which is for me the M5, and you can see that right above the M15 balance price range, we created that M5 weak swing low, right? So now what do I do, or what I did, I placed a limit order right below that swing low in anticipation of price running that low into a key level, right? As always, a stop run into a key level, the same concept that we used here. Stop run into a key level, we now apply as a lower time frame confirmation entry on the intraday setup, right? Here it was a swing trade entry without confirmation, and here we have now again same thing, stop run on the H1, and now we want to see a stop run on the M5 into an M15 key level, right? And I put my stops right below the candle that created the balanced price range, right? Which is right here. So entry here, stop loss here, and first take profit would be right around here at around 2R, and then I would leave partials all the way up for price to expand higher. For example, we have the round figure here, 134 as a key level. So that was my final TP, and I was taking partials all the way higher. Also, if you think about session profiles, also watch my video on session profiles if you want to know more about that. Here we have London making the low of the day, so we have a potential London reversal setup here. So now I want to see price to expand higher here, create a low of the day, and then in New York ideally a continuation profile. And you can see here we sweep that low into the key level, and now I want to see price to expand higher. Then heading into lunch, we start consolidating, and now I want to see price in New York session to offer a continuation setup. So we have New York session open here, we swept the lunch lows, and now I want to see price to expand higher here as well. We have a new dealing range on the M15, we have a swing low, swing high, and you can see here right around the discount we have this M15 fair value gap, and that's where I want to see now price to expand higher from in New York session. And you can see that's exactly the level where we expand higher, and then we also hit the final TP. If you want to see the analysis I showed you here before it plays out in the live markets, then you can find the link to my Discord right below. That's where I always share my analysis, and you can see here also on Monday, that's where I shared the pound trade idea at the key level. So if you want to join, you find the link in the bio below. And if you like the video, leave a like, comment down below what else you want to see, and see you guys in the next video.